What is happening, investors? It is your boy Jack. I am not a financial advisor, and oh, we are back, baby. You may notice that the background is different, and that is because I am finally moved into my new house. Now, we are not set up 100% as of just yet. You'll see my microphone is being supported up on whatever this contraption I have is. I have a Christmas tree sitting behind me. I'm not even in the room that's going to be my office yet. I'm still waiting for some things to get in. I don't even have Wi-Fi yet, alright? I'm running off my phone's 4G. But we are finally in a position to get back to our regular scheduled content. And I am so excited. I just well and truly am. I know I've been missing for a few weeks again now. But there's been so much going on behind the scenes. I don't even know how to get into it. But finally, we are here in my own space and I can speak with you guys again. So before we get into the topic of today, which is essentially going to be speaking about Lucid Motors, because as you guys know, Lucid has a special place in my heart. And since I've been gone, it's been pretty downhill after we got the rumors that Saudi PIF may buy up the rest of Lucid. They've come back down rather steadily since. So today I want to speak about them, give my updated thoughts on them. There's definitely some positives and some very much so not positive from their most recent earnings release. We're going to speak about what the next year or two looks like for Lucid, in my personal opinion. Where I think is going to be good levels to buy, where I think the price could go towards next, if you should be, you know, holding on strong, getting out, buying more, what prices to look towards, all of that juicy fun stuff, my friends. But again, I do genuinely want to just thank all of you for your continued support over the last couple of years. And now I really am so excited to get back to regularly posting content with all of you. I have a lot of plans to come. I want to start bringing back the lives far more often. We're going to be speaking about a lot of different companies going forwards. We're going to try branch out a little bit more than we have over the last while. And it's going to be fun. So please, my friends, if you wouldn't mind hitting that juicy thumbs up button nice and early for the first video back, it would mean a lot to me. If you are new around here and end up enjoying the content, hit that juicy red subscribe button as well. So again, just to kind of set the scene with Lucid Motors right now, they're sitting at about $8.67 a share in the pre-market. They're looking like they could be down just a little bit in pre-market trading as well. This huge green spike here where they went all the way from 924 and peaked out at 1778, as I briefly said a second ago, was just completely based off of this. EV maker Lucid surging on reports that the Saudi PIF will buy the remaining stake. Now, the PIF currently owns about 65% of Lucid as it stands, and it's one of the reasons why a lot of people, myself included, feel quite confident in holding Lucid through what is almost certainly going to be a shaky year to 2 years at the very least, especially given some of the numbers that we just got out of this most recent earnings report. So keep that in mind. That is why this inflated thing happened here. There was no need for this to really happen, but I mean, that's the stock market, baby. When people get excited, things can happen. Before this happened, Lucid was finally beginning to return to an uptrend of sorts. You see, from the 6th of January up until about the 26th of January, there was a solid few weeks here. We were actually making higher highs and higher lows. Now, what's happened since then is they slowly trickled back down to the price point where they were at the end of that upward move. The RSI is relatively low as of this moment in time. We could definitely see some upward movement if the EV market continues to go up in general, especially when you look at Tesla right now. They have been having some really nice green days. They have to an extent been carrying the EV market. Now, there's been some big red days in there as well for multiple reasons, but a lot of the EV market is following Tesla's lead once again. So hopefully, and I say hopefully, we can see some upward movement again relatively soon. But again, today's video, guys, is going to be focused on the longer term. That's what it always has been with me for Lucid Motors. It's been focusing on, you know, are they going to make us a lot of money in the 3, 4, 5 years to come, as opposed to, you know, just trying to trade in and out with these guys 10, 15, 20%, which you most certainly can do. There's a lot of opportunity to do that. So there's going to be a lot of recapping in this video. A lot of people may forget why we're invested in Lucid for the long term. So a year in review, we achieved record production in Q4 and 2022. This is a theme that we're going to speak about an awful lot in today's video, my friends. Production and deliveries, because there has been a lot of bad in regards to production and deliveries over the last year, coming down from, you know, 20,000 expected and only delivering, what was it, 7,000 and something along those lines. The production was 7,000 and the delivered was about 4,300 in 2022. So, you know, not what people were hoping for whatsoever, and is definitely a very large reason why the stock downtrended so heavily for the majority of the year. Okay, but that aside, that's only one thing to it. So customer deliveries quarter to date as of December 31st. Obviously, a lot will have happened since then. Was that just sub 2k, production 3400. We have more numbers than this now. Our reservation sitting at about 28,000, which again, we are going to expand on later. And why this isn't as bad as it looks. We've seen this with a lot of EV companies, and a lot of this is to do with macro things going on in the world, not just Lucid in particular. That means sitting on potential sales of about 2.7 billion. And again, we're going to expand on that relatively soon. Some other key accomplishments from 2022. Signed an agreement to monetize our revolutionary powertrain technology with our groundbreaking new electric drive unit for motorsports, now the standard front drive unit in leading electric racing series. Lucid Air earned the highest possible rating of 5 stars in the rigorous Euro NCAP crash testing process. Released UX 2.0, our most extensive software update, which is so important in the EV world right now, comprising tens of millions of new lines of source code delivered over the air. Signed our first vehicle emissions credit deal, which is going to be huge for the company, as it is with any EV company right now. And completed a lot of at-the-market equity offering. People feel strongly for or against this. I do ultimately think it's going to be an important part of Lucid's future. Now, an important thing about Lucid Motors from an investor's point of view is the way they handle their business. It's their vertically integrated production. I mean, Tesla led the way with this, and now we see every single EV company out there speaking on vertical integration, which is very important. So Lucid's core EV technology is not only created in-house, but also manufactured at LPM1, Lucid's dedicated EV powertrain factory in Arizona, okay? AMP2 in Saudi Arabia construction is underway. So obviously we have AMP1 right now. At AMP2, Lucid plans to reassemble Lucid Air vehicles that are pre-manufactured at the US AMP1 facility in Casa Grande, and over time produce complete vehicles. At its peak, we expect to manufacture up to 155,000 vehicles per year at AMP2. So key progress in regards to all that, because right now that's just a lot of words, it's a lot of potential. AMP1 Phase 2 expansion will add about 3 million square feet to the existing plant and increase install capacity to 90,000 units per annum in 2024. This is going to be far more than enough, far more than needed in the near term anyway. So we do not have to worry about any sort of capacity issues or running into any sort of capacity issues. Expansion is to include production for the Lucid Gravity SUV, which will be a big thing, as well as additional production flexibility to meet the demand for the Lucid Air. An expansion will include an in-factory logistics center, on-site stamping facility, and relocation of our powertrain center. So again, this here is just what we should be aware of as it stands. Nothing groundbreaking, nothing incredibly new, but important things nonetheless. Now, in regards to their studio and service network, again, we should know the majority of this. They have 31 studio and service centers in North America, 3 in Europe, which have been only put up very recently. And we opened our first Middle Eastern studio in Riyadh, which is actually where the PIF is based out of. So that's probably why there is one there. I'm sure that's going to be good in general for the PIF. They'll be able to bring their big rich friends out to have a look at the vehicles. Now, this one is one we have to speak about, and we're just going to speak about it even from a common sense point of view. So a track record of prudent liquidity management. Now, a lot of people will argue the opposite point here, and that's why they've had to go ahead and raise so much. But as of the end of 2022, Lucid held ample liquidity of $4.9 billion with a runway of 12 plus months into the first quarter of 2024. Now, this is a pretty tough one. As of December 31st, 2022, Liquid's balance of cash and equivalents stood at about $6.3 billion. A year later, the figure had shrunk to just 1.7 billion. So even now, sitting on 4.9 billion, a lot of people are going to be worried that, you know, they're not actually going to be able to go for the 12 plus months that they are making it out to be. And this is a very, very, very real possibility. But that is why it is so important to understand just how involved the PIF is and just how much money this company has, to the extent where they could essentially throw money at Lucid forever. And again, if they end up taking over the company at some stage of life, I don't think that's even going to be a bad thing in my personal opinion, okay? But track record of prudent liquidity management, we'll see. I think that track record still needs to be improved. Since going public in July 21, Lucid has focused on building a fortress balance sheet centered around ample liquidity through a successful $10 billion plus of diversified funding across equity, equity-linked, and debt instruments. They will continue to be opportunistic in exploring and diversifying access to financing sources. Look, what this essentially screams to me, and again, guys, I don't want to just come out here and scream all of the good things. I really am trying to highlight the bad things. We're more than likely going to see more dilution this year. Hopefully not until at least the second half of the year, I would say, especially given how much was raised just towards the end of last year. But it's coming. It's essentially inevitable. What we would really like to see is just the share price come up in general. So whenever that financing has to happen, we are getting a better deal overall. PIF has about a 60% ownership. I think it's closer to 65% now. I could be incorrect. They continue to be the largest shareholder by an absolute long shot. They have invested about 3.6 billion into Lucid since 2018, and they're going to invest a lot more than that over the years to come. It really is that simple. Now, the financial highlights, okay? This is obviously so important, especially when a lot of what it comes down to at Lucid Motors, when people are going to decide if they're going to buy them or not, is are they going to survive, or are they ultimately going to go bankrupt and our shares become worth $0? That is one of the biggest fears you will see online. Is Lucid going to be around in 5 more years, or are they going to be filing that Chapter 11 and going into the ground? Me personally, I never see that happening. I don't see how in the world the PIF would ever let that happen when they have pumped so much money into them, and they're going to continue pumping a lot more money into them. Now, we look at the 12 months ended December 31st, 22 numbers versus 21 numbers. We can see cash equivalent investments have gone down, but other assets have gone up, and total assets are pretty much about the same. Liabilities have come down a little bit. Stockholders' equity has gone up a little bit. All in all, it's okay. You know, considering a lot of this obviously was being financed, being through investments. It's not the best thing in the whole world that we've ever seen. Now, if we do have a look at this here, I like to look at this, looking at our net losses. Again, let's look at the 12 months ended. It has gotten an awful lot better, and more money is being put into R&D and SG&A, which obviously is something we love to see. Now, their cost of revenue has gone up like crazy because of that, but that's what you expect to see. So the net loss paints a pretty picture, but the free cash flow shows a bit more of a realistic picture, and that has gotten considerably worse. And I don't expect that to change, sadly, in the very near-term future, especially when we look at our guidance here. Production volume is now at 10 to 14,000 vehicles, okay? Now, you may think, why is that a bad thing, considering that they produced 7,100 vehicles in 2022? That seems like absolutely huge growth, and it is, but our initial production volume targets for 2022 was 20,000, my friends. So I don't think a lot of people are going to put a lot of confidence into these numbers coming true. And even if they do, it's a very large range, and I think Lucid did this on purpose so that they have some wiggle room, so that they can come out and say, you know, it's going to be on the lower end. Maybe the first half of the year they'll come out and say it's going to be 10 to 12,000, and then if things go poorly, going to say it's 10,000, and then it'll be the end of the year again, and we're all going to be in a big kerfuffle if there has been very little production volume growth. But that is something we don't know. It's something we're going to have to wait and see and wait to find out about. On the other hand, if they have lowballed themselves here and they do end up beating that 14,000 vehicle top line, that is going to be a fantastic catalyst for the company, and 100% production volume for the company in this year would be very good in my opinion. So I would absolutely love to see them smash this out of the park. I would love our next quarterly report to say, you know, 3,000-4,000 vehicles delivered, or produced at the very least. It's just not going to happen. Let's be realistic with ourselves. So they have sufficient liquidity at least into the first quarter of 2024. And yes, when you look at the numbers, that makes sense. It would look more like second quarter or even third quarter. But again, that is assuming that no unexpected things come up. And markets just opened as I'm recording this video, and Lucid actually opens in the green a little bit. Tesla up in the green as well. That's probably why. But again, this is the first minute of market open. Absolutely anything could happen. Capital expenditures of approximately 1.5 to 1.75 billion in 2023. Again, I just see this number being higher, and I'd rather that they would have came out with a higher figure as opposed to somewhat inevitably coming and disappointing investors when things have to get revised in the order we don't want to see them revised in. So all in all, guys, we can look at that earnings release, and I mean it's quite a lot of nothing, honestly. There's not a lot of huge news in there, which again is going to more than likely make it difficult for Lucid to explode anytime in the near future unless some other things are to come out. Now, a few more things just from a couple of different articles here to expand on that earnings presentation, to open up the conversation to us all a little bit more. There's one here from Investor Place. Are they a buy? Lucid Group investors got ahead of themselves in January. As it turns out, Lucid only produced 7,100 vehicles in 2022. This figure falls far short of their original prediction that it would produce 20,000 EVs last year. Now, what's interesting about this is that this was actually a beat on their revisions. But again, when you look at it from the grander picture, don't let the stats manipulate you or lead you astray. It was still a huge miss overall. So now we want 10 to 14,000 vehicles. There's a credibility problem. That is exactly what I was trying to say. I would personally be delighted if we can beat 14,000 vehicles this year. And if we do, then it leads into a really, really nice 2024 and 2025. And people who are accumulating shares will be heavily rewarded, in my opinion. But again, that comes down to, does the company do what the company has to do? Do they actually perform? Do they produce these vehicles? Do they sell these vehicles? And I mean, that should be a given for any investment we have. That's what needs to happen for us to make money as investors. Now, a little bit more just to expand on this. Net losses grew to 472 million in 2022. But the CFO addressed the growing losses in the earnings transcript. As we produce vehicles at low volumes on production lines designed for higher volumes, we have and we will continue to experience negative gross profit related to labor and overhead costs. However, as we scale production, we would expect to see the economy of scale benefits. Now, this makes sense, and we spoke about, AMP1 having that 90,000 production amount by the end of this year, potentially. It makes sense. If you just think about it, guys, imagine you go to work in an Amazon factory and they can scale hundreds of thousands, they can move hundreds of thousands of things at any one given time. It's going to cost a lot overall, but on a per item basis, it's a lot cheaper. As opposed to, if you were somebody working from home for your own company doing crafts and you buy all of the materials yourself, you might have to pay $1.50 to produce your own thing, but then you sell it at whatever price. If you have to pay for all of this machinery that lets you produce things at, let's say, 30 cents, literally 80% cheaper, but you have to be able to produce thousands and thousands and thousands at a time, you don't get those economy of scale benefits if you cannot physically do it yet. So that is what is happening here, and that is again why we're not going to see the best margins, the best returns for a year plus to come. So keep that in mind, guys. As a long-term investor, remember those points. Don't get upset when we see things like this. When we don't see the best margins in the world, Lucid is setting themselves up for the future. And again, that's why it's so important to understand the power, the amount of money that the PIF has, and just how much confidence they quite clearly have in Lucid. A lot of people might think that they're doing this just in order to sell out an awful lot later. There is no way in the world that is the case, or they would have sold out a long time ago. You have to remember, guys, PIF did not sell a single share when Lucid was up in the 60s, when they were up in the 50s. In the 40s, the 30s, the 20s, the 10s, they've never sold a single share. They are not here to try and rug pull you. If they were, that would have been done a long, long time ago, my friends. And again, the declining reservations are misleading. One of the bearish sentiments during the Q4 earnings call was the decline in reservations. They reported 28,000 reservations, which is down significantly from the previous quoted 34,000. However, we believe there's a macro issue that's tied to the overall economy. Many consumers would rather save their cash during these uncertain economic times instead of splurging on a $100,000 plus supercar. And I mean, guys, that is just absolutely, utterly common sense. And we are seeing it with other EV companies as well. It's not a Lucid issue. Don't see this as a bear point, essentially, is what I'm trying to say. But my friends, I think that will cover it for our first video back on Lucid. Trust me, I'm going to be covering these guys an awful lot. Still just love them. I still think they're such an exciting company, and I still just every single day wake up and check if there has been any more news. I want more news, man. Give me the news, baby, please. But if you did watch this video all the way till the end, you, my friend, are a true legend. I appreciate you being here from the bottom of my heart. Your support means the world to me. Please, if you did enjoy, hit that like button and subscribe for more content. Also, if you have watched all the way till the end, I want to let you guys know I am still working with Webull, so if you would like those free stocks, hit the link in the comment section or in the description down below. Sign up, deposit $100. Literally get yourself some free money. Whatever you do with that free money is up to you. You're not obliged to stay with them for the next 300,000 years, but they are a fantastic service, and I recommend that you do. Anyway, guys, I hope you have a beautiful, blessed day. I'll see you for another video very soon. Peace.